Hey there, aspiring traders. Ever stared at those incredible profit screenshots on social media and wondered, why isn't that me? You're not alone. The brutal truth is, becoming consistently profitable in trading isn't just hard. It's a relentless battle against market volatility, your own psychology, and often misleading information. Forget the flashy Lamborghinis and instant riches. That's the fantasy peddled by gurus who profit from your dreams, not from actual trading. Most new traders, a staggering 90%, blow up their accounts within the first year. They jump in, eyes wide with hope, only to be chewed up and spit out by the unforgiving markets, leaving a trail of lost capital and shattered confidence. This isn't meant to discourage you, but to set the record straight from day one. You need to understand the odds, acknowledge the steep learning curve, and be ready to confront some uncomfortable realities. Are you ready to peel back the layers and discover what it really takes to stand among the elite few who conquer this beast? Because the path to consistent profitability starts with a dose of cold, hard truth.
So, you've heard the grim statistics. Now let's talk about what success actually looks like, divorced from the unrealistic hype. Real, consistent profitability isn't about making a 500% return in a week. It's about steadily growing your account over months and years, often with single-digit percentage gains per trade, but with relentless consistency. It's not about catching every top and bottom, but about executing your plan flawlessly, day in and day out, through winners and losers. Imagine a disciplined sniper taking precise shots with a clear target, rather than a machine gunner spraying bullets hoping to hit something. This is a marathon, not a sprint. It's about managing risk so meticulously that even a string of losses doesn't cripple your capital or your confidence. It's about building a solid foundation, brick by painstaking brick, and understanding that small, incremental gains compound into substantial wealth over time. Forget the get-rich-quick fantasy. Are you ready to embrace the get-rich-slow, but get-rich-for-sure reality?
Before you even think about charts, indicators, or entry points, you need a radical transformation in your mindset. Most beginners approach trading like a trip to the casino, putting money down, hoping for a big win, and letting emotions dictate every move. That's a surefire way to lose everything. To become consistently profitable, you must evolve from a gambler into a meticulous strategist. This means divorcing your ego from your trades, accepting that losses are an integral part of the game, and viewing the market with cold, rational logic. Your capital isn't chips, it's your business investment. Every trade needs a clear why, a defined risk, and an exit strategy, not just a gut feeling. It's about developing the mental fortitude to stick to your plan even when fear screams sell or greed whispers buy more. This isn't just about technical skills, it's about mastering your inner game. Are you prepared to train your mind to be your greatest asset, not your biggest liability? Thinking you can just jump into the market with a few YouTube videos under your belt? Think again. Real education isn't optional. It's the bedrock of sustained success. This isn't about memorizing every indicator, but understanding the fundamental forces that drive market prices. You need to grasp concepts like supply and demand, support and resistance, basic candlestick patterns, and the different market structures, trends, ranges, and reversals. Don't gloss over the terminology. Truly internalize it. Think of it like building a house. You wouldn't start framing before laying a solid foundation, right? Many skip this crucial step, eager to get rich now, and end up paying the ultimate tuition fee to the market itself. Invest in quality courses, read reputable books, and don't be afraid to ask questions. This foundational knowledge will be your compass in the chaotic sea of trading. Are you ready to commit to becoming a student of the market, even before you become a master? Once you've got the basics down, the next critical step is finding your edge. What exactly is an edge? It's simply a statistically demonstrable advantage that allows you to make money over a large number of trades. This isn't about some secret indicator or magic formula. It's about having a systematic approach that, when applied consistently, has a positive expectancy. Whether it's a specific price action pattern, a unique combination of indicators, or a particular time of day trading strategy, your edge is your personal roadmap to profitability.
Without an edge, you're essentially gambling, making random entries and exits based on hope or fleeting emotion. Developing an edge requires deep analysis, observation, and often modification of existing strategies to fit your personality and available time. This isn't about blindly following someone else's system. It's about understanding why a strategy works and tailoring it to your unique trading style. Are you ready to put in the analytical work to discover your winning formula?
Listen up, because this is perhaps the single most crucial element for survival in the trading arena: robust risk management. Without it, even the best trading strategy is a ticking time bomb. Risk management isn't just about setting a stop loss. It's about meticulously calculating how much capital you are willing to lose on any single trade and strictly adhering to that limit. A cardinal rule for professional traders is never risking more than 1% to 2% of your total trading capital on any one position. Think about it. If you risk 10% per trade, just 10 consecutive losses, which happen to even the best, can wipe out your entire account. This isn't theoretical. It's cold, hard math. Your primary goal isn't to make money. It's to protect your capital so you can stay in the game long enough for your edge to play out. Are you disciplined enough to make risk management your unwavering priority, safeguarding your financial future even when the market tries to test your resolve?
Building on risk management, let's talk about its vital sibling, position sizing. This is where the rubber meets the road. Position sizing determines exactly how many shares, contracts, or lots you buy or sell based on your predefined risk per trade and your chosen stop-loss level. It's not a fixed number. It fluctuates with your account size and the volatility of the asset you're trading. For example, if you decide to risk $100 per trade and your stop-loss dictates a $1 movement in price, you'd buy 100 shares. If the stop-loss only requires a 50-cent movement, you could buy 200 shares, still risking only $100. This dynamic approach ensures that you always risk the same dollar amount, regardless of the trade setup. It's the invisible shield that protects you during inevitable drawdowns, allowing you to absorb losses without catastrophic impact. This isn't guesswork. It's precise calculation that gives you resilience. Are you ready to master the art of position sizing and fortify your trading against the market's inevitable assaults? Imagine a world-class athlete who never reviews their game footage. Unthinkable, right? Yet countless traders plunge into the markets day after day without ever truly reviewing their performance. This is where the power of a detailed trading journal comes in. It's not just about listing your entries and exits. It's a deep dive into your entire trading process. Document your reasoning behind each trade, the market conditions, your emotional state, and the outcome. What went right? What went wrong? Why? This meticulous record-keeping allows you to identify recurring patterns in your behavior and your strategy's performance. Are you consistently missing your profit targets? Do you tend to revenge trade after a loss? Your journal reveals these critical insights, helping you refine your edge, eliminate bad habits, and amplify your strengths. It's your personal mentor, offering objective feedback without judgment. Are you prepared to commit to this powerful self-analysis tool and unlock the hidden pathways to your trading mastery? Before you risk a single live dollar, you absolutely must prove your strategy has a statistical edge. How? Through rigorous backtesting. This isn't optional, it's non-negotiable. Backtesting involves applying your trading rules to historical data, meticulously recording every entry, exit, profit, and loss as if you were trading live. This process reveals your strategy's true win rate, average profit loss, maximum drawdown, and, most importantly, its profit factor. You're looking for a strategy that shows consistent profitability over a significant sample size, typically hundreds of trades. This isn't about finding perfection. It's about confirming a positive expectancy. If your backtest results are shaky, your strategy needs refinement, not live capital. Backtesting instills a deep sense of confidence, knowing your approach is statistically sound rather than relying on guesswork or hope. It's your scientific lab, proving your theories before you conduct real-world experiments. Are you ready to put your strategy to the ultimate historical test and confirm its viability? You've got your strategy, you've backtested it,
and you found an edge. Excellent. But don't rush into live trading just yet. The next crucial step is paper trading, also known as demo trading or simulated trading. This is your risk-free sandbox, a vital bridge between theoretical knowledge and real-world application. Here, you execute your strategy in real-time market conditions using virtual money, identical to live trading, but without the financial risk. This phase isn't just about practicing entries and exits. It's about building muscle memory, reinforcing your discipline, and getting comfortable with your platform. More importantly, it's about developing emotional resilience without the pressure of losing actual capital. How do you react to a string of losses when no money is on the line? It helps you iron out kinks in your execution and fine-tune your mental game. Consider it your flight simulator before you pilot a real plane. Are you ready to refine your skills and build unshakable confidence in this crucial risk-free trading ground?
All right, you've backtested, you've paper traded, and you're feeling confident. Now it's time for the real deal, live trading. But here's a crucial piece of advice. Start small, incredibly small. Don't throw your life savings into the market from day one. Begin with the absolute minimum capital required to execute your strategy with your chosen position sizing. This phase isn't about making big money. It's about acclimating your psychology to the intense pressure of having real capital on the line. Even if your paper trading was flawless, the emotional impact of real money is a completely different beast. Your heart might race, your hands might shake, and you'll face temptations to deviate from your plan that you never experienced in simulation. This initial period is your transition zone. Focus solely on disciplined execution, adhering to your risk management, and proving to yourself that you can follow your rules under pressure. Are you ready to take this measured, calculated leap into the live markets, prioritizing discipline over immediate profits? Trading is 20% strategy and 80% psychology. This isn't just a catchy phrase. It's the absolute truth. The market is a ruthless amplifier of your emotions, constantly testing your discipline, patience, and resolve. Greed can push you to overtrade or hold on to winners too long, turning profits into losses. Fear can make you cut winners short or panic sell at the worst possible moment. Frustration can lead to revenge trading, throwing your carefully crafted plan out the window. Mastering emotional control is not about eliminating emotions. It's about acknowledging them and preventing them from dictating your trading decisions. Develop strategies to manage stress, take breaks, and stick religiously to your trading plan. Understand that every loss is a learning opportunity, not a personal attack. Your ability to remain calm, rational, and objective in the face of market volatility will be the single greatest determinant of your long-term success. Are you prepared to face your inner demons and master the toughest opponent in trading? Yourself? If emotional control is the battle, discipline is your ultimate weapon. It's the unwavering commitment to execute your trading plan flawlessly, day after day, week after week, no matter what the market throws at you. Discipline means taking every valid setup your strategy provides, even after a string of losses, because you trust your back-tested edge. It means walking away from the screen when your rules aren't met, even when FOMO, the fear of missing out, is screaming in your ear. It means respecting your stop loss without hesitation and taking profits at your predefined targets, even when you feel the market could go further. Discipline isn't sexy. It's not glamorous. But it's the quiet, consistent force that separates the consistently profitable traders from the masses who burn out. It's about building habits that serve your long-term success, not fleeting urges. Are you ready to embrace discipline as your non-negotiable daily mantra and make it the cornerstone of your trading career? The market is a dynamic, ever-evolving beast. What worked yesterday might not work today, and what works today might be obsolete tomorrow. Economic conditions shift. Technological advancements impact trading landscapes, and global events constantly introduce new variables. A rigid trader clinging to a single strategy regardless of market regime is doomed to fail. To achieve consistent profitability, you must cultivate radical adaptability. This means constantly observing the market, understanding when your edge is performing optimally and when it's not, and being willing to adjust or even temporarily step aside. It's about having a toolkit of strategies or variations of your core strategy that can be deployed depending on whether the market is trending, ranging, or experiencing high volatility. It's not about chasing every new fad, but intelligently evolving your approach based on real-time data and a deep understanding of market cycles. Are you ready to become a chameleon, blending seamlessly with the market's changing colors, ensuring your survival and prosperity? Imagine a pilot taking off without a flight plan, or a general leading an army without a battle strategy. Absurd, right? Yet many traders dive into the markets daily without a clear, written trading plan. Your trading plan is your blueprint for success, a comprehensive document outlining every aspect of your trading business. It defines your trading style, the markets you trade, your specific entry and exit rules, your risk management parameters, position sizing methodology, and even your daily routine. This isn't just a checklist. It's a sacred document that removes subjectivity and emotional decision-making from your trading. It's your ultimate guide, holding you accountable and ensuring consistency. When doubt creeps in or emotions run high, your plan is your anchor, bringing you back to rationality. Without a plan, you're just reacting. With one, you're proactively executing your edge. Are you prepared to commit the time and effort to create this foundational document and trade like a true professional? One of the primary tools in a profitable trader's arsenal is technical analysis. Don't be intimidated by the jargon. At its core, technical analysis is simply the study of past price and volume data to predict future price movements. It's about reading the market story as it unfolds on your charts. You'll learn to identify trends, support and resistance levels, chart patterns like head and shoulders or double bottoms, and use indicators such as moving averages, RSI, or MACD to confirm your observations. This isn't crystal ball gazing. It's about understanding crowd psychology reflected in price action. Technical analysis helps you find high probability entry and exit points, set intelligent stop losses, and define profit targets. It provides a structured framework for your decision-making, taking the guesswork out of trading. But remember, no indicator is perfect. It's how you interpret and combine them that gives you an edge. Are you ready to become a master storyteller, deciphering the market's intricate narrative through its charts? While technical analysis focuses on price action, fundamental analysis gives you the why behind the moves, especially in longer-term trading and investing. Fundamental analysis involves evaluating a company's financial health, economic indicators, industry trends, and geopolitical events to determine an asset's intrinsic value. For stocks, this means looking at earnings reports, balance sheets, and management quality. For currencies, it's about interest rates, inflation, and GDP growth. For commodities, it's supply and demand dynamics. Understanding these macroeconomic and microeconomic factors helps you grasp the bigger picture, providing context for your technical setups and confirming the long-term viability of your trades. It helps you avoid trading against powerful underlying currents and can give you conviction to hold positions through short-term noise. While short-term traders might lean heavily on technicals, a grasp of fundamentals can prevent major blindsides. Are you ready to broaden your perspective and understand the powerful forces shaping the markets you trade? Beyond individual emotions, there's a collective psychology at play in the markets, the psychology of the crowd. Understanding this can give you a profound advantage. Markets are driven by fear and greed, hope and despair. When everyone is euphoric, it might be time to be cautious. When panic reigns, opportunities often emerge. Learning to recognize sentiment shifts, identifying common behavioral biases like herd mentality or anchoring, and seeing how they manifest in price action is crucial. Often, the market does the exact opposite of what the majority expects. Think about the classic buy the rumor, sell the news phenomenon. By understanding these collective irrationalities, you can avoid becoming part of the herd that often loses money. It's about being an independent thinker, not just a follower. This isn't about predicting the future. It's about predicting how people will react to the future. Are you ready to become a student of human behavior and leverage collective emotions to your trading advantage? This isn't just a fancy financial term. It's the engine that will turn your consistent, small profits into significant wealth over time. Compounding is simply earning returns on your initial investment plus the accumulated interest or profits from previous periods. Einstein famously called it the eighth wonder of the world, and for good reason. Imagine if you consistently make just a 2% profit on your account each month. It might not sound like much, but if you reinvest those profits, your account grows exponentially. A small account can snowball into a substantial one over a few years, even with modest returns. This emphasizes why consistent, disciplined trading with stringent risk management is paramount. You're not just trading to make money, you're trading to grow your capital base, which then generates even more money. It's the ultimate wealth accelerator, rewarding patience and persistent execution. Are you ready to harness this incredible force and watch your trading capital grow beyond your wildest initial expectations?
Let's get this straight. You will have losses, and not just small ones. You'll have losing streaks, periods where it feels like the market has a personal vendetta against you. How you handle these inevitable setbacks is what truly defines you as a trader. A common beginner mistake is to let losses trigger emotional responses, like revenge trading or abandoning a perfectly valid strategy. Instead, view losses as simply the cost of doing business, a natural outcome of any probabilistic endeavor. Each loss, when managed according to your plan, provides invaluable data. Did you stick to your risk rules? Was it a valid setup that just didn't work out? Or did you make an error? Analyze, learn, and move on without attachment. Don't let a losing trade define your next one. The goal isn't to avoid losses, it's to ensure your winners are bigger and more frequent than your losers over time. Are you ready to embrace losses as essential teachers on your path to consistent profitability?
One of the most insidious enemies of consistent profitability is overtrading. This usually stems from a combination of boredom, impatience, or the urge to make back a recent loss. Overtrading is taking trades that don't meet your predefined criteria, forcing setups where none exist, or simply trading too frequently. The result? Increased commissions, higher exposure to risk, and often a string of avoidable losses that erode your capital and confidence. Remember, capital preservation is your primary objective. Sometimes, the best trade is no trade at all. A profitable trader understands that quality trumps quantity. They wait patiently for high probability setups that align perfectly with their edge. Sitting on your hands and observing the market, even for hours, is often more productive than jumping into a mediocre trade. It takes immense discipline, but resisting the urge to constantly be in the market is crucial. Are you ready to embrace patience and selectivity, understanding that sometimes doing less actually earns you more?
Your success as a trader isn't just about strategy and mindset. It's also about having the right tools for the job. Choosing a reliable broker is paramount. Look for one with competitive commissions, tight spreads, fast execution, robust charting software, and excellent customer support. Don't fall for brokers offering outlandish bonuses. Always prioritize security and regulation. Beyond your broker, consider additional tools, reliable data feeds, advanced charting platforms, market scanners to find opportunities, and perhaps even news services to stay informed. These tools are your arsenal, empowering you to analyze markets effectively, execute trades efficiently, and manage your positions with precision. Skimping on these essentials is like trying to build a skyscraper with a toy hammer. Research thoroughly, read reviews, and choose tools that align with your trading style and budget. Are you ready to equip yourself with a professional-grade trading arsenal that supports your journey to consistent profitability?
The journey to consistent profitability is not a destination. It's an ongoing process of learning and refinement. The market never stops evolving, and neither should you. True mastery in trading comes from a commitment to continuous education, staying updated on new market dynamics, refining your strategies, and constantly working on your psychological edge. Read new books, attend webinars, follow reputable market analysts, and engage with experienced traders. Don't become complacent, even when you're doing well. Every trade, win or loss, offers a lesson if you're willing to find it. The trading landscape is littered with once successful strategies that became obsolete because traders failed to adapt and learn. Cultivate a curious mind, challenge your assumptions, and always seek to improve. This dedication to lifelong learning will ensure you remain agile, relevant, and consistently ahead of the curve in this incredibly competitive field. Are you ready to embrace the path of eternal student, forever sharpening your skills and knowledge?
Trading can be an incredibly solitary endeavor, and that isolation can take a heavy toll on your mental and emotional well-being. It's easy to feel alone, especially during challenging drawdowns or when celebrating wins that no one else truly understands. That's why building a support network is crucial. Connect with other serious traders, not the get-rich-quick crowd, but individuals who share your commitment to discipline, learning, and long-term success. Join online communities, participate in forums, or find a mentor. Having peers with whom you can share ideas, discuss challenges, and celebrate successes can be immensely beneficial. They can offer different perspectives, provide accountability, and simply remind you that you're not the only one battling the market's complexities. A strong network can provide encouragement when you're down and honest feedback when you need it most. Are you ready to reach out and build a community that strengthens your resolve and accelerates your growth as a trader? Finally, and perhaps most importantly, understand that consistent profitability in trading is a long game. It's not about striking it rich overnight. It's about building sustainable wealth over years, even decades. This requires immense patience, resilience, and an unwavering commitment to your process. There will be setbacks, market crashes, and personal challenges, but your ability to stay the course, stick to your plan, and continuously adapt will determine your ultimate success. View trading as a serious business, not a hobby or a lottery ticket. Treat your capital with respect, your strategy with diligence, and yourself with compassion. The consistent profits will follow as a byproduct of your disciplined approach. This journey transforms you, not just as a trader, but as an individual. You'll develop incredible mental fortitude, self-awareness, and financial literacy. Are you ready to commit to the long game, to embrace the journey, and to truly build a legacy of sustainable trading success?